Welcome to the SBCA podcast, Component Connection, where we explore the people, ideas, trends, and innovations shaping the market and the future of structural building components. Whether you're on the shop floor, in the office, in the yard, or out in the field, we're glad you're here.
Hello, I'm Molly Butz, Managing Director for SBCA, and I'll be your host for this episode of Component Connection Lumber Insights. I'm joined today by Justin Binning and Jeff Hoggard. Justin and Jeff are lumber traders from American International Forest Products, or AIFP. Welcome to the podcast, gentlemen.
Thank you, Molly. Happy to be back.
Awesome. Good to see you both. It's been a little bit. We're on to a monthly schedule for our listeners that were used to hearing us every couple of weeks. So just a quick reminder on that. And that means it's literally been about a month since our last Lumber Insights. So I think we should just kick it off with what's been happening in the market for the last 30 or so days.
You know, I think I mentioned it last time we were on. It's like, man, time flies. And it feels like last week that we did the last one. It doesn't feel like the time has expanded to me. Yeah. And golly, I to use the golly of Ken Timmons.
Yeah. Not here.
I wish I had something exciting to talk about for some breaking news or something different.
What's the line from Groundhog's Day? Well, we're here again. I just see Bill Murray just, saying, oh, it's Groundhog's Day again. And I think that's, again, obviously I wasn't here for the last podcast, but I think that one of the reasons that it probably feels that way is that every day since then has been pretty similar. So
yeah, summer's here.
That's great.
Summer's here. We've had a lot of industry events take place this past month in July. We're at the MLMA down in Biloxi, which was really well attended. The best turnout they've had, over 1,000 attendees. We've got the
inland right now.
Inland event going on right now. So a lot of people moving and shaking across the country. And, I think overall the tone has been positive and upbeat. Most folks have been. In terms of overall business, spotty would be, I guess, a word that I would use, and not where they want it to be. And I think different parts of the country are doing better than other parts of the country right now. And obviously we've got a tariff deal coming up here towards the end of the month, which could be, really significant and could really not. Also,
we have summer shutdowns out of the Eastern Canadian mills and stuff right now as well, which I think will be extended just due to market conditions. So where some mills might normally take, just a week, I think there'll be 2. Or some mills take 2, I think it'll be 3, and along down the line. Again, market conditions, just kind of the reasons for that.
Yeah, and I think that kind of takes us to where we've been in the last 30 days, right? Like market conditions overall have not really improved.
Still trading in a very tight window across the board. I mean, relative to the swings that you would normally see.
You've got a lot of species, and I'll speak to yellow pine, I guess, just more specifically, but we had a lot of price retraction. We've had some settling now over the last 30 days. With that said, we haven't seen a lot of price appreciation. And so a lot of these products are trading, at or below return levels for the sawmill. So with that said, there's some pricing that's a premium to print, and then you have the customer, i.e. the liquidity factor in the market going, wait, that seems expensive, and here's a crazy offer. And then the other side's like, I want nothing to do with that. And so it feels like we're kind of at this standstill almost, and just a grind against each other with, I think, again, overall business right now is not where everybody wants it to be. And I think production is certainly outweighing liquidity and demand. So makes
I'm
it tough.
definitely hearing that from our component manufacturers too. I've talked with a couple of folks this week that are, starting to have more concerns than they were earlier in the season. Like, okay, things will pick up, but now it feels like it's been a little more stagnant than anyone was hoping for. So you're reiterating that, and you're seeing a much more global picture of it than I necessarily am in my one-to-one conversation. So yeah, that's a little concerning, I suppose.
Yeah. I mean, inventory levels are the second highest they've been of unsold homes currently in the U.S. in the past 2 decades. And a lot of the incentive that the builder was using, whether it was buying down the rate or throwing in free this or free that has been luring in and securing deals on new homes, it's not working right now. And I think obviously, all the headwinds that we've faced and are currently facing with interest rates and all the things we've talked about until we're blue in the face here, podcast pass, they're still there, right? And then you've even had some added things and, global turbulence that's happened over the past 30, 60 days. Not even talking about tariffs, but, wars, rumors of wars and such and things. And I just think everybody's just in this wait and see mode a little bit. Yeah. And so.
Well, again, the biggest barrier to entry, right? And again, I'm sure having listened to the podcasts and having our conversations on a daily basis about this, it's the bottom line is a first-time home buyer, regardless of if it's a new home, an existing home, that biggest barrier to entry is still that down payment. First-time home buyers, that's the biggest struggle that we're running into. I had a customer visit here a couple of weeks ago, and he deals in the manufactured home space. They're having a great year because you can go buy a manufactured home. First-time home buyers are able to do that. The down payment's substantially cheaper on something. That's where they're seeing great years. They're loving what's happening right now, and they would love for it to continue. Now, at the same, the other side of the token, and as Justin was discussing, he doesn't feel like he can buy it cheap enough. And we've run into this standstill, whether it's his facilities out east, Midwest, or out west. It's, he feels like stuff should just be getting cheaper. And now he's getting pushed back to where numbers are, mills have finally hit that level for him where he's just saying, all right, uncle, and, if we have to get beyond this point, we're shutting down. So we start flirting with shutdown levels. And again, I'll speak to Doug fir here out west, hem fir here out west. You've got Doug fir log costs that certainly have not come down at all. I know in podcast past, I've brought that up. And it rings true today to the point where one of my mills has taken and made a portion, the stud portion of their mill. They're not even going to run Doug fir product anymore. They're going to run white fir because it's something that they can actually monetize. And they will stick the Doug fir logs that they buy into one of their other facilities that gets them closer to a break even or are able to make money. So you look at both sides there. You've got, the production and, again, the consuming buyer that, again, to Justin's point, are just standing there looking at each other like, okay, who's going to break first? They find other ways to do it, to stay working if they can. But I think that we've seen, especially out of Canada here of late, I believe it was the Resolute was the last announcement with, I don't remember how much,
could be
how many layoffs that they announced there last week, but that's substantial stuff. And again, we see that on a weekly basis, whether it's a small mill, folding up shop or, taking it down to, hey, we're going to run 3 days a week to, mills of size like a Resolute or a West Fraser saying, hey, we aren't able to do it here. So,
and then the other side of that, there's still no reaction from it, right? I mean, we saw the same thing in Yellow Pine with 2 sawmills in the Carolinas on the Camphor announcement that totaled, I want to say it was around 300 million feet total, 350 million feet between the two sawmills. So, somewhat sizable, right? I mean, a full-blown powerhouse sawmills, 450 million feet a year. So combining those equals, close to a big churning mill. Again, it was like, okay, like in terms of market reaction, it was just, I wouldn't even say minimal. It was pretty much
non-existent.
Yeah. So same thing. Go ahead.
What does this mean for the overall fiber basket that we're seeing right now between US and Canada? Like what does that mean? Are you guys finding that there are some things that are starting to get harder and harder to find? Is there too much of it on the ground and that's the problem? And, like what does that turn into for someone trying to buy wood?
Yeah. I mean, we're constantly playing this weighted scale game between supply and demand. Now with demand at a 1.5 plus, 1.4 plus space, the established production and where it's at, we've got really solid markets. We've got a higher trading zone in terms of pricing, nothing crazy, not even close to COVID, but I would call it healthy, right? A healthy market. And when we get into a million to 1.2 right in there, all of a sudden the available production outweighs demand. I mean, it's just, but I think the mindset going back over the past decade as we looked forward to where we're at now was the idea that that's kind of where we'd be, right? And based on where we've been the last 2 decades, which is underbuilt, right? I got in the business in 2010. We had 500,000 housing starts that year. And they say to keep up with population growth and need, that number's somewhere again between 1.2 and 1.5. And so we did that for many years and slowly, gradually got up to a more healthier number in, 18, 19, building into 20. And so we really forecasted, I think as an industry, we're going to have a lot of need. We saw the investment from the Canadians in the U.S. South because their fiber basket had continued to dwindle. They knew that wasn't going to expand, and where can they get more fiber and where it's the most cost advantageous? That was the U.S. South. That investment's been made. And we're waiting for the party to start. Everybody's kind of waiting for the party to start. And we thought it was starting in COVID. And we were not ready. It was at scale from a supply side at that point. And that's why we saw what we saw, which was $1,800 2x4, which is not sustainable. And so again, we're kind of waiting for the party to start. So it's just, and I think the untapped wealth in our industry from housing in particular, obviously it's at an all-time high. There's a lot that's going to go down when it goes down, right? And but right now people are attached to their sub 3.5% interest rate mortgages, and everybody's waiting and seeing, and they've got $250,000 or $500,000 equity in their home because home prices really, and now you've got some markets that are starting to come back a bit, but not anything like we faced in the mid 2000s, obviously, or back in 2005 in the collapse there. But so we're in a really healthy environment. It's
moving slow. You say we're waiting for the party to start. It's a good way of portraying it. And again, we're back to just everybody standing around looking at each other, waiting on a decision to be made one direction or the other. The inventories that these buyers are running, it is just in time. We're beyond just in time now. We really have to be paying attention day in and day out, even though it feels like the same day over and over again, because I don't know what the catalyst is going to be. Again, I've joked about it for years. My crystal ball's been broken since I started doing this, but go ahead.
Yeah, no, I was just going to say, I think you bring a good point, right? But I also, on that point, in terms of understanding the market, understanding trends, that's where we come in, right? That's what we do really well to get our customers in front of those times, right? So it's hey, we got to start thinking about shifting mindset and how we're approaching purchasing lumber. I know this is kind of more of a, not our standard format, but I've actually kind of liked it. It's kind of fun. But quick update on pine. Again, a pretty standstill market across all. To answer your question earlier, Molly, in relation to these curtailments, extended periods of shutdown times, it has not affected availability. It really hasn't. Now, you're getting into some prime length items in 2x4 and some spots in 2x6 where a little bit more difficult in terms of finding it for prompt, but finding anything right now is still doable and certainly at a number. Some core items, driver items in pine are bringing a slight premium to print right now, without a doubt. 2x4 16s, great example of that. Another thing it's interesting to take note of on some of those lengths in the low grade, and 2x4 16s, perfect example. A number 3 and a number 2, the cost difference between them is minimal, if any, right? You could buy a number 2 at darn near the same price as you can a number 3 right now. So don't see that all the time, but that's the case right now. Stress grade material, definitely findable. But yeah, not seeing, there's not one thing that's impossible to source. And I think overall pricing, again, as we've alluded to, investment levels, this, that, like there's no limited, and by limited, I mean virtually none, in downside risk right now in yellow pine lumber. That's just where we're at. And that's probably rings true for most everything. And this countervailing duty jumps up 20% here in 2 weeks.
Or
That's another,
or whatever percentage each mill gets. I mean,
well, whatever. But yeah, you could be looking at a very sizable jump if it happens.
Yep.
Right.
I guess I'll jump off of that and touch to, what we're seeing out west here. I would say I'll start with a green, just because again, much smaller market to it, but again, a lot of component guys out here in the west, you're still using the green. Justin mentioned compression between a number 2, number 3, price. We are very much in that compressed, region as we've been the last few years between number 2 and number 1. And that rings true even more this year. We had a large mill conglomerate that bought a couple other sizable green mills here over the last couple of years and have changed the production of those mills to encompass more 3-inch and 4-inch material, which means to the green market that there's a lot less number 2 available to buyers of said product. So again, that affects, a lot of the yards, a lot of the jobbers that have to have a number 2, multifamily stuff. But again, plenty of component guys that are buying the number 2 material for whether they're designing for it. It's if they're looking for it, you're going to see that price very similar to a number 1 or a lot closer to it than it typically would be. There hasn't been a ton of push up. We've traded in a small window. Again, I know pricing, I'm not going to get specific with it, but whether it's up or down, again, I won't do any specifics on it, but we've traded in a small window on that. We haven't broken out of that in the better part of 9 months. So again, and even when we were outside of it, it wasn't for very long. Dry, been very similar to that. Again, we don't have the same problem in terms of the number 1 and 2 compression, but the availability on that products or all those products, again, kind of to Justin's point, anything is available if no matter how obscure it actually might be. You might have to wait a couple of weeks, 2 to 3 weeks for some specifics on, a real high-end MSR or something like that. But again, still doable. Hem-fur, again, high competition with anything coming out of Canada. Again, pricing on that has been kept real low because, again, the Canadian product that comes in keeps a cap on a lot of that pricing.
Well, all right. This was a little bit different version of our Component Connector Lumber Insights, but we took a turn and we stuck with it. So I think with that, we can wrap up our episode for this week. Justin, Jeff, thank you for your continued expertise and enthusiasm. And thank you all out there for listening to SBCA's podcast, Component Connection. If you've enjoyed this episode and found it valuable, please like it and share it with others. Stay up to date and in the know by subscribing to Component Connection on whatever podcast platform you use most. Thanks so much, gentlemen.
Thank you, Molly.
Thanks for listening to Component Connection, brought to you by SBCA. If there's a topic you'd like us to explore in a future episode, email us at podcast@sbcacomponents.com. Until next time, stay connected.